Given Trump administration support for crypto, some wonder about gold's future as a hedge asset.
Expert Andre Dragosh suggests the choice is not simple.
He proposes gold protects against stock market losses.
Bitcoin acts as a counterweight to bond market stress.
Historically, gold has been a safe haven during equity sell-offs.
Bitcoin has struggled during equity panics, but its relationship with United States Treasuries is interesting.
Studies show a low or negative correlation between Bitcoin and government bonds.
Dragosh suggests investors do not need to choose, as they play different roles.
Dogecoin has rebounded from a low of $0.21.
It is now showing a cup and handle pattern.
This pattern suggests a potential price target of $0.30.
Meanwhile, there is debate about the roles of Bitcoin and gold in investment portfolios.
Andre Dragosh of Bitwise argues that gold still offers protection against stock market declines.
He also notes that Bitcoin acts as a hedge against bond market stress.
This raises questions about how these assets will fit into investment strategies in 2025.
Former President Trump has a pro-crypto stance.
XRP is showing bullish patterns.
Some analysts believe it could reach $5.
This comes as South Korean buyers appear to be accumulating XRP.
This increased buying activity is contributing to the positive price momentum.
Separately, Bitcoin is being discussed alongside gold as a portfolio asset.
Bitwise suggests Bitcoin hedges bond stress while gold protects against stock sell-offs.
This raises questions about their respective roles in portfolios for 2025.
It is unclear if Bitcoin will fully replace gold in the future.
Crypto analyst Alex Kruger believes the market is bearish enough to become bullish.
Kruger stated on X that most crypto charts look so broken and bearish that it is bullish.
He argues that when price action looks this bad, a reversal may be near.
Kruger shared charts showing Bitcoin and Ether falling below short-term upward trendlines.
He also posted a Solana chart demonstrating relative resilience.
Derivatives charts showed traders have become heavily defensive.
Kruger noted significant long liquidations, especially after the recent market close.
He highlighted that Bitcoin and Ether absorbed most of the selling pressure while altcoins held steadier.
Web3 startups raised $9.6 billion in venture funding during the second quarter of 2025.
This makes it the second largest quarter on record, even with fewer deals, according to Outlier Ventures.
Investors are putting more money into fewer projects, suggesting a maturing market.
Web3 fundraising is evolving from hype-driven activity to targeted investment.
Only 306 deals were disclosed in the quarter, the lowest since mid-2023.
However, the median deal size rose across every stage.
Series A funding staged a comeback, growing to $17.6 million.
Private token sales saw their strongest showing since 2021, raising $410 million.
River Financial Services says individuals still own most Bitcoin.
Their August 25 research groups Bitcoin supply into categories to show market share.
River estimates individuals control about 66% of Bitcoin, or 13.83 million coins.
This includes self-custodied wallets and exchange accounts classified as individual.
Businesses account for about 6% of supply, or 1.3 million Bitcoin.
Exchange-traded funds and funds control about 8%, or 1.63 million Bitcoin.
Governments hold about 1.5%, or 306,000 Bitcoin.
Lost Bitcoin makes up about 8%, or 1.58 million Bitcoin.
River Financial Services says companies are absorbing Bitcoin at a much faster rate than it is being mined.
Their research shows businesses are taking in about 1,755 Bitcoin per day.
This is compared to the approximately 450 Bitcoin mined daily.
River defines businesses as companies with Bitcoin treasuries and those holding Bitcoin on their balance sheets.
The 450 Bitcoin per day mining figure reflects the Bitcoin halving of April 2024.
This halving reduced the reward per block to 3.125 Bitcoin.
With blocks mined roughly every 10 minutes, this results in about 450 new Bitcoin daily.
Besides businesses, funds and exchange-traded funds account for another 1,430 Bitcoin per day in inflows.
Arthur Hayes, co-founder of BitMEX and Maelstrom, believes Hyperliquid's Hype token has significant upside potential.
Hayes is known for inventing the perpetual swap and now invests in early-stage infrastructure projects.
His latest blog post argues Hype could rise 126 times, based on a Maelstrom valuation model.
Hyperliquid is a decentralized exchange built on its own blockchain, unlike Coinbase or Binance.
Traders primarily use it for perpetual futures contracts.
Hype, its native token, serves as a governance tool and economic stake.
Holders can vote, stake for rewards, and benefit from trading fees linked to the token value.
Hayes argues that when governments print too much money, people turn to stablecoins.
A wave of crypto exchange-traded funds could hit United States markets this fall, changing how investors access digital assets.
Some see this as a turning point for mainstream adoption.
Others are bracing for inevitable casualties.
Many crypto exchange-traded fund applications are filed with the Securities and Exchange Commission.
Nate Geraci, president of Nova Diaz Wealth Management, believes most will be approved if they meet requirements.
He said investors, not regulators, will decide which products thrive.
The exchange-traded fund market is a meritocracy where investors vote with their money.
The market sorts winners from losers.
The Internal Revenue Service Chief of Digital Assets, Trish Walker, recently exited the agency.
This leaves the digital assets operation without leadership as new tax policies are expected to increase crypto filings.
Walker joins two other recently departed IRS crypto officials moving to the private sector.
The Treasury Department has not yet named a replacement.
New tax policies will soon impact crypto filers.
This includes the 1099-DA form, which millions may receive for the first time from crypto brokers.
A significant increase in crypto filings is anticipated for the 2025 tax year.
This surge includes filings from taxpayers who did not report earlier income due to confusion regarding handling.
Austin Federa, formerly of the Solana Foundation, is launching 00, a protocol designed to improve blockchain communication and scaling.
00 aims to be faster than the internet, crucial for crypto trades.
Its testnet already boasts nearly 12.57% of staked SOL, with mainnet launching in September.
Federa compares 00 to the Flashboys moment in traditional finance.
He explains that 00 prioritizes data transit time, much like optimizing pit stops in Formula One racing.
00 allows multiple independent contributors with their own fiber networks to create a high-performance mesh network.
While supporting Solana initially, 00 is not built on it and has its own ledger system.
Solana was chosen first due to its high transactions per second to node count ratio.
Pump, Fund's native token, Pump, has risen by 17% this week while the broader market declines.
The protocol is using platform fees to repurchase tokens.
These buybacks aim to support holders by reducing circulating supply and absorbing sell pressure.
This model is becoming increasingly common among crypto projects.
Pump is currently trading at $0.0035.
This is about 40% higher than a month ago, but still 50% below its July debut.
After launch, it fell from $0.007 to $0.0024 in just 10 days.
Recent momentum suggests buybacks are helping stabilize the token's market.
Strategy, formerly MicroStrategy, has innovated United States capital markets by issuing preferred stock under tickers STRK, STRF, STRD, and STRC. These
offerings raised approximately $5.6 billion year to date, representing 12% of all United States initial public offering issuance.
This highlights investor interest and Strategy's position as a major corporate representative for Bitcoin.
Performance varies across the preferred stocks, with STRF leading at a 31% return.
STRK follows at 19%, STRC at 8%, while STRD lags with a negative 6% return.
This diversified financing allows Strategy to fund its Bitcoin treasury, currently holding 632,457 Bitcoin.
This cements its position as the world's largest corporate holder of the asset.
Strategy's enterprise value relative to Bitcoin net asset value is 1.60.
Everything Blockchain Incorporated has signed a Memorandum of Understanding to adopt Flare Network's XRP finance framework.
This makes Everything Blockchain the second public company to adopt the XRP finance framework, following Vivo Power International.
Flare aims to transform XRP into a productive asset for institutions.
Flare's system allows companies to convert XRP into FXRP and use it in decentralized finance protocols.
Flare's co-founder and CEO, Hugo Fillion, stated that XRP has been a cornerstone of digital finance but has lacked institutional utility.
He believes Flare addresses this by providing a yield framework designed for corporate treasuries.
Everything Blockchain's CEO, Arthur Rosenberg, sees this as a shift in how public companies view digital assets.
He emphasizes the potential of XRP as a yield-bearing instrument.
Stellar's native token XLM fell from 39 cents to 36 cents between August 28 and August 29.
Market data shows over 41.89 million XLM changed hands as large holders reduced exposure.
Despite this, Stellar is approaching 10 million registered accounts.
Daily growth of 5,000 to 6,000 new corporate wallets is boosting these numbers.
XLM dropped 1.38% between 1:26 p.m. and 2:06 p.m. on August 29.
It then recovered 1.27% in the following 15 minutes, closing at 36.1 cents.
One spokesperson said the turbulence was sentiment-driven.
Some large buyers saw the decline as a buying opportunity.
XRP has declined 4% amidst a Bitcoin sell-off.
However, the cup and handle setup suggesting a potential rise to $5 remains intact.
This pattern suggests XRP could see significant price appreciation.
Bitcoin is also facing headwinds, impacting the broader crypto market.
Andre Dragosh of Bitwise discusses the roles of gold and Bitcoin in investment portfolios.
He argues that gold still provides protection against stock market declines.
Bitcoin, on the other hand, acts as a hedge against bond market stress.
This raises important questions about how investors should allocate assets in 2025.
The Ethereum Foundation is prioritizing interoperability between Layer 2 networks.
This marks a shift from scaling to focusing on user experience.
The team aims to make cross-chain interactions feel like single-chain execution.
3 goals are central to this initiative: interoperability, speed, and finality.
The Ethereum interoperability layer is a key part of this plan.
It is a trustless messaging system for cross-chain interactions.
The Open Intents framework simplifies complex cross-chain transactions.
It allows user-declared goals to abstract away fragmented tooling.